Hi, John Rapasky from the Counsel Mortgage Group. I had a few questions that came to us, and I thought I'd take the opportunity to answer these. How long does home loan underwriting usually take? Well, that kind of depends on the volume of loans that are going through the lenders at the time. If, for example, this year in 2014, underwriting can take a day to 2 or 3 days, as you know, and you've read in the papers or online that there just aren't a lot of loans going through now, and the volume of loans isn't as much as it was like last year. In 2013, with all the refinances, it could take 2 weeks. It just depends on how many loans are in the pipeline as to how long underwriting can take. So another question, what is PMI in home loans? Well, that's a good question. PMI is private mortgage insurance, and it applies if you have anything less than 20% equity in the home. Lenders require you to get mortgage insurance, and you pay mortgage insurance in addition to your mortgage payment if you have less than 20% equity. How is the mortgage insurance determined? Well, it's determined based on your credit score and how much equity you have. So if you have a good credit score and you only have 5% equity, you'll probably pay more in mortgage insurance than if you had a good credit score and you had 15% equity. So those are the factors that go into how much you have to pay in mortgage insurance. Should I refinance my home after only 1 year? Well, that depends. I mean, you'd have to do a cost-benefit analysis to determine if you're saving any money. I mean, you certainly don't want to refinance if the rates are still the same. A lot of people out there will say, well, we use a rule of thumb that the rate has to be at least 1% better. Well, okay, we'll take a look at that, but is that enough of a savings? I mean, you have to take a look at it in connection to what your time frame is. So let's say that it costs you $2,000 to save $100 a month. Well, under that, you'd have a break-even point of 20 months down the road. So if you're going to be in the home for 5 or 6 more years, 20 months sounds fine. It's less than 2 years, then it works. Another thing to keep in mind when you refinance, typically your amortization period starts all over again. So if you're in a 30-year fixed mortgage, and then you're 1 year into it, and you're going to refinance in a brand new 30-year fixed mortgage, well, you only got 1 year into your mortgage. So it may not be as severe. But let's say you're 8 years into your mortgage, and now you want to refinance because you want to lower your payments. Well, if you go into another 30-year fixed mortgage, you just lost 8 years on that mortgage, and now you're doing 30 years all over again. You may want to look at a 20-year mortgage. And in fact, there are some lenders out there that will even offer a 22-year mortgage, and they have the exact number of years. Well, those were great questions. If you have any others, please submit them at our website, www.counselmortgage.com, or give us a call, 480-502-1000. Thanks.